Let's talk oil and other commodities, get some ideas for the week ahead. We're joined by Phillip Streible, Chief Market Strategist at Blue Line Futures. Phillip, thanks very much indeed for coming on the show.
Yeah, thanks for having me.
Phillip, we've got oil, of course, did go below 90 bucks. We've seen prices above that today. You see a good chance oil gets back up to the mid-90s. Do you see it getting back above 100 anytime soon?
Well, anything is possible. I mean, in this geopolitical environment, there's a lot of sensitivity. If you start to see all of a sudden the Fed does pivot dovish a little bit earlier, they change some of their stance. Some of the Fed officials actually acknowledge that energy prices have come down, specifically gasoline and food prices have come down. They pivot dovish. You'll see risk assets go back up. Naturally, oil prices will reflate. That's why it's really important for the Fed not to leak too much data, too much narrative, and just follow the numbers going forward. But I do think that oil prices are trapped within a range, about 85 on the downside, 95 on the upside. We did see the September contract reflate back above 90, and also you got Brent crude trading at 96.
It's interesting, isn't it? There's been such a drop in oil. What is the reason? Is it just concerns about the recession?
The recession is definitely going to help bring oil prices down. I mean, the stance of OPEC pumping additional, that really was a total flop. Only 100,000 more barrels. There has been a couple weeks of inventory builds on the EIA. Also the government is still releasing from the SPR, so they're doing anything they can in order to get these prices down. You've got gasoline, national gas averages come down something like 51 days in a row. So because of that, I think it has helped out. It has rebalanced a little bit too. If you look at the September contract versus the contract that we've been more active in the December, that spread has narrowed from about $8 a barrel down to about $2. So a lot of the pressures have come off a bit, but we remain at this elevated level.
What about copper? What would be your view there? Is copper getting back to $4 a pound anytime soon?
We've just been in a consolidation range. We got to break out above this 360, 379 is going to be your 50-day moving average. The Shanghai and LME stockpiles have tightened just recently. You do also have this new bill the U.S. Senate approved to fight climate change. That's going to naturally be more charging stations, revamp the electrification grid, so a lot more copper demand out there. If the Fed is able to somehow navigate this soft landing, I think copper will be one of these markets that takes back off to the upside. You do have a lot of short interest in copper. I think that'll come out of the market, and that could be the reason for a turnaround.
What about gold? Would you be interested in gold right now?
Gold looks great. Gold is one of these ones that's going to front run when the Fed pivots. That's why we've been coming off the low. It is at the 50-day moving average, right around 1805. So we'd like to see it close really over 1820 to get that extension upwards. We would be buyers of any kind of correction on gold. The volatility has come down quite a bit on it. So it is a good asset that complements people in their portfolios, given the current economic environment we're in. It tends to work well in deflationary environments because the Fed is coming off a hawkish cycle, going into a more of a pivot to be a bit more accommodative. So I think it's front-running prices right now, but I think into next year, gold could do real well.
What about the crops, corn, wheat? Of course, we've seen wheat dropping from its post-Ukraine invasion highs.
Yeah, it's, I mean, you have a couple of things. You have Ukraine is actually exporting some wheat right now. Well, it's a very fluid situation. Just the news, there was a lot of optimism, sparked quite a bit of liquidation. You also had some of the crops over there, some of the wheat crop had come out and said that they were having some record crops. The ones that did not have that drier weather, I know going through the Midwest this weekend, we had quite a bit of much needed rainfall, so that's going to put some pressure on the market. However, a lot of these grains are around these psychological levels, $6 in corn, $14 in beans. You're going to have a bit of a tug of war on prices around these levels.
If you had to pick a grain, which one do you think has the best prospects right now, Phillip?
Oh, I actually like soybean oil the best. I think the chart pattern looks the best. So not specifically a grain, a derivative of the grain. If you get that rebound back in energy prices, you get any kind of dry weather. I think that's kind of your perfect storm grain to be long.
Give us your favorite commodity trading idea for the week, Philip. Does one jump out for you?
Well, silver broke out to the upside, looks really good. That's one that's highly emotionally charged. I'd like to get some kind of pullback and get in on that. Same thing with the platinum market, 950. We get a pullback to 926. I'd like to be long on that. I think you could have easy stop order placements on those. Silver back below $20, platinum below that 900 level, really around 880, I think is your critical level of support.
So silver below 20 bucks an ounce is attractive?
Absolutely. Same thing with platinum, right around that 900 level, I think is an attractive play as well.
Oh,